Hi, everyone. My name is Jacko Zhang, Director of the Hong Kong Economic and Trade Office in San Francisco. Welcome to the webinar organized by the Hong Kong ETO in San Francisco and New York on Envisioning Web3 and Virtual Assets, a dialogue with Hong Kong regulators. A lot has been happening in the Web3 and virtual asset space in Hong Kong. Since the issuance of a policy statement on virtual assets development in Hong Kong, a comprehensive licensing regime for VA trading platforms has been introduced. A proposed framework on stablecoin regulation is going to be published, and a high-level task force has been set up to guide the Web3 and VA development. What opportunities are offered, and how should the industry navigate? Today, we have brought together a panel of policymakers and regulators to tell us Hong Kong's policy direction, licensing regime, and proposed framework for Web3 and virtual assets in Hong Kong. On the panel are Justin To, Principal Assistant Secretary for Financial Services and the Treasury, Hong Kong SAR Government; Elizabeth Wong, Director of Licensing and Head of FinTech Unit, Hong Kong Securities and Futures Commission; Ernest Ho, Head of Digital Finance, Monetary Management Department, Hong Kong Monetary Authority. The moderator of today's discussion is Edith Young, General Partner at Raise Capital. The moderator and the speaker's bio are on today's event page. The webinar will begin with a panel discussion, and at the end there should be a round of Q&A for speakers to address questions from the audience. If you have any questions during the webinar, please put them in the Q&A box for the moderator to see. Also, today's webinar will be recorded, and attendees of today's webinar will receive a discount code to get 15% off tickets to attend Hong Kong FinTech Week. So make sure you stay until the end to get the discount code. Without further ado, may I invite Edith to get started. Thank you.
Thank you, Jacko. Thank you for having all of us to really get this conversation going, focus on virtual assets. It's been a really, really hot topic worldwide because Hong Kong is definitely now getting to be one of the central hotspot, particularly helping to promote Web3 and virtual asset. So I'm going to dive right into it. And to start, maybe first question for Justin. So there's so much going on and happening in the virtual asset and Web3 space, since especially the publication of the policy statement of development of virtual asset in Hong Kong almost like a year ago. When we're talking about there's so much happening, we're talking about the combined sort of the Web3 crypto market cap is over $1 trillion now, and over 84 million active wallet address is out there. So where do we stand now, especially for Hong Kong? Justin?
Well, thank you. It is a great pleasure for us to be able to speak to everyone here about the developments of crypto and virtual assets in Hong Kong, because as Edith just mentioned, the scene is really vibrant here in Asia and especially in Hong Kong. And indeed, there are actually quite a lot of exciting developments over the past year in Hong Kong over virtual assets and Web3. We have rolled out an array of measures to facilitate the development of the sectors in Hong Kong, and with focus on both market regulation and also on market development. In terms of market regulation, we have at our centerpiece a virtual asset service provider licensing regime, which we put in place by amending the law and by putting in very clear and transparent guardrails about risk management. This covers not only the more traditional AML and CFT side, but more importantly, also on investor protection. And the regime actually came into force in June this year. And we have here our colleague Elizabeth from the SFC, who can actually talk more on that in detail later on. And we are currently now working with the Hong Kong MA with Ernest there on the proposed regulation regime on stablecoins. So we have quite a lot going on in terms of regulation. But then on the market development side, we also have been pushing the boundaries by providing more opportunities for the market. To start with, we already have a few VA futures ETFs listed for retail trade in Hong Kong. And the SFC is also working on a circular to update its regulatory requirements for tokenized assets and security tokens. And earlier this year, the government, we have also completed the pilot issuance of a tokenized green bond project ourselves, while the HKMA is also exploring various pilot projects and initiatives about launching an e-Hong Kong dollar and for retail use in terms of CBDCs. And these are not just the only things that we're doing. We are also aware of the need to have attract more enterprises and talent to come to Hong Kong to form a really vibrant ecosystem here. So we have a dedicated fintech unit from Invest Hong Kong, which has been hopefully approaching many of the participants so that we can provide the needed facilitation to set up office in Hong Kong. And another development is that the government has launched earlier this year the Office for Attracting Strategic Enterprises, or what we call OASIS, which is led by the Financial Secretary himself for providing tailor-made measures to actually help enterprises and their employees to come to Hong Kong. These include, for example, visa and visa arrangements, and also education arrangements for the children, etc. So we are actually very excited about the opportunities offered by V8 and the things that we can actually do to help the sector succeed and thrive in Hong Kong. You're muted. Yeah.
Am I unmute now? Okay. Just, it sounds like there's a lot of things like your team is working on. But at the same time, Web3 and it's really fast moving, right? From not just for technology related, but also financial services, gaming, NFT. How do we actually make sure that Hong Kong is stay on top of it and to be really truly competitive in the space?
Well, for one part, our regulators and also the policy team have been maintaining very close dialogue with the sector. But then more importantly, we believe that at the very high level policy and regulatory coordination, we really need the top senior government officials to be aware of the developments of the market and the needs of the sector. So which is why the Financial Secretary has actually set up a dedicated task force on promoting Web3 development and in Hong Kong. And the task force actually convened its first meeting. The task force actually includes not only senior officials and regulators, but also market participants and also professional services from various disciplines, including, for example, legal services, compliance, and different things, and also the academia and other industry professionals. So we believe that this can actually provide a synergy for us to actually learn what is going on in the market and develop measures and policies that actually fit the actual needs of both the market and the general economy as a whole. And currently, I cannot, of course, go into a lot of details about what the task force is actually looking into, but some of the areas that we'll be discussing about include, for example, infrastructure, ecosystem, the regulatory landscape, and also talent training, promotion, and attracting enterprises. And going to the larger picture, we believe that Hong Kong actually is in quite a very unique space in terms of offering a lot of advantages for Web3 companies to develop in Hong Kong. Because as we all know, Hong Kong is a renowned financial center with a very renowned and robust regulatory regimes and experiences. We have a very deep capital market, and a very diverse pool of investors. So we believe that we have the strength and experience to actually help create the synergy between the traditional financial market and also the VA side. Because when we look at it, we do believe that the traditional financial market will really welcome having a wider range of investment opportunities and investment assets in the form of virtual assets and other related services. But at the same time, the Web3 and the virtual asset sector in general can actually benefit a lot through building connections with the traditional financial sectors and gaining access to a wider array of investors who have been actually, as we can see, very interested in getting exposure into the market. So we believe that Hong Kong actually has that unique edge for developing VA.
That's awesome. Maybe we can switch topic a little bit into more on the licensing part of it. I think Hong Kong definitely make news, especially now we have officially have a licensing regime for virtual assets and exchange. Liz, maybe we can sort of shift the conversation to you. Why did the SFC decide to regulate centralized virtual asset exchange platform? Like what is like the sort of the main goal, and what's some of the key things that we should learn from you?
Right. Back in 2020, the government previously conducted a consultation on the regulation of virtual asset service providers. And back then, the government identified that centralized virtual asset trading platforms were the most prevalent virtual asset activity. So there was a proposal to introduce a licensing and regulatory regime for centralized virtual asset trading platforms, and this was implemented when the bill was passed in December 2022. Now, on the SFC's part, the SFC has actually introduced a comprehensive regulatory framework since 2018. And under this framework, we regulate a wide range of virtual asset related activities. So we regulate centralized virtual asset trading platforms, trading at least one security token, and also services provided by a wide range of SFC licensed intermediaries. For example, we have fund managers that manage virtual asset funds, discretionary account management in virtual assets, and also the provision of virtual asset dealing and advisory services. So when we regulate, the SFC follows the principle of same business, same risk, same rules. So what this means is that we look at the activity that is done and we see whether there is a similar activity in the traditional financial world. And if there is, then we use the same rules that apply in the traditional financial rules and we move it over to the virtual asset space and we regulate it with the same kind of rules. So prior to the implementation of the new licensing regime that I mentioned just now, we have been regulating centralized virtual asset trading platforms, trading at least one security token. We did this under our existing powers, which we already have under the Securities and Futures Ordinance. And under this regime, we have so far licensed 2 centralized virtual asset trading platforms. Now, under the new regime, the SFC regulates centralized virtual asset trading platforms in Hong Kong, which provide trading in non-security tokens. So what happens is that together with our old regime, we actually regulate all centralized virtual asset trading platforms operating in Hong Kong, or if they actively market their services to Hong Kong investors.
Got it. So what are some of the key requirements for the virtual asset? Like if I wanted to comply, what are some of the things that I need to know?
Right. So as I mentioned just now, we adopt a same business, same risk, same rules approach. So the regulatory requirements that we apply to virtual asset trading platforms are comparable to those which apply to SFC licensed securities brokers and also automated trading venues. We've done a bit of adaptation to address the additional risks that virtual assets would pose. So the regulatory requirements cover a broad range of areas because the way we regulate is to regulate from an investor protection perspective. So the areas that we cover include safe custody of client assets, know your clients, avoidance of conflicts of interest. Definitely we regulate cybersecurity and also anti-money laundering. We also have accounting and auditing requirements and financial resources requirements. And we also require the platforms to conduct market surveillance to prevent market misconduct. So for example, in relation to safe custody of assets, a very fundamental requirement that we also require our existing licensed corporations to comply with is that a licensed platform is required to segregate client assets from house assets. So this is a very fundamental kind of principle to ensure that if anything happens to the platform, client assets are bankruptcy remote. So in relation to the additional risk posed by virtual assets, we've identified that the custody of virtual assets primarily concerns the safe management of private keys. So what we require these platforms to have robust private key management internal policies and procedures. Now, in order to further protect client assets, we also require licensed platforms to have in place a compensation arrangement to cover potential loss of 50% of client virtual assets in cold storage and 100% of client virtual assets held in hot and other storages. So the compensation arrangement should include any or a combination of third-party insurance, funds, virtual assets, and bank guarantees. Now, in relation to conflicts of interest, a licensed platform should not engage in proprietary trading or market-making activities on a proprietary basis. In relation to accounting and auditing requirements, we require a platform operator to submit an auditor's report each financial year. And also the auditor must opine on whether the licensed platform has been in compliance with the applicable regulatory and legal requirements. Now, finally, in relation to financial resources, we require licensed platforms to have 12 months liquid operating expenses. And this is in addition to the existing requirements that already apply to licensed brokers and automated trading venues.
Got it. Liz, so are retail investors allowed to trade on these licensed platforms? And is it more for institution, or is it applied to like just normal people like our mom and dad can trade on it too?
Right. Previously, we only allowed professional investors to trade on our licensed virtual asset trading platforms. But on introducing the new regime, we also conducted a consultation, and we reached the decision that we would allow our virtual asset trading platforms to provide services to retail investors. So since August the 3rd, 2023, this year, we have actually approved our 2 licensed virtual asset trading platforms to provide services to Hong Kong retail investors. So what we've done is that we do see the risk of trading in virtual assets, especially for retail investors. So we've imposed additional investor protection measures on trading platforms to ensure that investors are adequately protected under the regime. So for example, we have requirements including the platform needs to conduct a virtual asset knowledge assessment for each retail client. And they also need to ensure suitability in onboarding of retail clients. So what a licensed platform needs to do is that they need to assess the client's risk tolerance, and they also need to set an exposure limit for each client to ensure that the client's exposure to virtual assets is reasonable with reference to the client's financial situation and personal circumstances. So this is at the client level that we've implemented additional requirements. We also have other requirements on token admission. So we have set some token admission criteria, and we also require our platforms to conduct robust due diligence on each token that it lists. So for the tokens that they list for retail investors, we have required that these tokens must be of high liquidity and must be large cap virtual assets. So this requirement is actually to remove the potential of market manipulation for those that are not liquid or not large cap virtual assets. So in addition to the token admission criteria and due diligence, we also require platform operators to comply with disclosure requirements to ensure that investors can make an informed decision when they invest in virtual assets.
Yeah, that makes sense. You, in some senses, apply a lot of the rule and best practice that you do with non-virtual assets to now to the virtual asset world. And on a completely different note, I think your organization, like with this, have a lot of other regulatory regime for non-virtual asset related activities. So how does this new license regime kind of interact with sort of the other virtual asset related activities, because there's a lot more to it just than trading, right?
Yes, definitely. I'm not sure if the audience is aware, but we've actually issued a joint circular with the Hong Kong Monetary Authority back in January 2022. And what we've done in that joint circular is to provide guidance to our licensed intermediaries as to when they want to provide virtual asset related activities, what kind of requirements that they should be complying with, and what standards of investor protection should they be able to achieve. So in that joint circular, what we've done is that we've allowed licensed corporation and banks to provide virtual asset dealing services for their clients. And how it interacts with the virtual asset trading platforms regime is that in that circular, we require our licensed corporations and banks to only partner with SFC licensed virtual asset trading platforms. Now, The reason behind this requirement is due to the unlevel regulatory landscape internationally. What we've seen in other global jurisdictions is that most virtual asset trading platforms are only subject to light touch regulation, such as regulation from an anti-money laundering perspective or a payments perspective, but not like the regulatory regime in Hong Kong, where we regulate from an investor protection perspective. So due to this difference, we thus have given our SFC licensed platforms an edge, as licensed corporation and banks in Hong Kong must partner with our licensed virtual asset trading platforms in providing virtual asset dealing services. Now, as a further extension of retail access that is now allowed on our licensed platforms, we will be issuing soon a revised joint circular with the HKMA to relax the regime to enable retail investors to also access virtual asset dealing services, virtual asset advisory services, and even virtual asset portfolio management services provided by our SFC regulated intermediaries in Hong Kong. Now, what we'll be doing is that we will impose some of the additional safeguards that we have imposed on our licensed platforms onto the licensed corporation and banks. So, for example, in respect of virtual asset dealing services, we will be imposing the requirement to set an exposure limit for each of their retail clients as part of the onboarding requirements to ensure suitability. And this is equivalent to the requirement that we impose on our platforms. We impose this requirement on the licensed corporation and the bank now because the end client is the client of the licensed corporation and the bank, and not the client of the licensed platform. In relation to advisory services, we will include a requirement that for any virtual asset that is recommended to retail investors, these tokens must be of high liquidity and must be a large cap virtual asset. So this is also an extension of the requirement that is supposed to apply to our licensed platforms. Now, turning to virtual asset portfolio management, again, we will also be imposing the same requirement of a high liquidity, large cap virtual asset on the portfolio manager, so that when they provide retail investors can only be able to access these tokens that can meet the criteria. Now, this is part of the efforts of the SFC's gradual expansion of allowing virtual asset related activities to be provided to retail investors. This is part of our efforts to provide clear guidance to enable the industry to grow in a healthy and orderly manner. So we have previously already allowed more retail participation through different types of virtual asset related products. For example, we allow retail investors to trade virtual asset futures ETFs, and we are looking into whether there are other types of products that can be allowed. Now, from a bigger picture perspective, our approach to providing clarity and consistency is to support the responsible and sustainable development of the underlying innovative technology. So we welcome the growth of the fintech community in Hong Kong. And I think the extension to all of this technology is that we are now looking at tokenization, as we have heard that it has the potential to enhance efficiencies throughout the product lifecycle, both at the issuance and settlement stages. So we are very supportive of financial institutions to experiment with tokenization and to tokenize traditional financial instruments. Our perspective is that from a regulatory perspective, in relation to using technology, we think that as long as you tokenize assets, whether bonds, funds, you do not make investors worse off, then we think that that would bring about investor benefits and is also in line with our investor protection mandate. So we are looking into issuing a circular to provide more guidance to the industry on what we expect when our intermediaries distribute tokenized products to their clients. So we are very happy to work with the industry on this, and we hope that our guidance would be able to support the continued development of the industry.
That's super awesome to hear. I think sitting in San Francisco, you hear like this year in 2023, like the BlackRock and the Fidelity of the world also apply for their own big spot Bitcoin ETF. So it's definitely a really hot topic, and excited like coming from this world to see that Hong Kong is so on top of it. To switch topic a little bit, Ernest, who is joining us from the Hong Kong Money Authority, let's talk about stablecoin, which is something that drive a lot of trading volume on a day-to-day basis in the West. And Ernest, I'd love to hear your viewpoint around stablecoin in general, and why do you pick this topic? Love to hear your thoughts.
Oh yeah, thank you. Thanks, Edith. Thanks for having me. Also, perhaps I can talk a little bit about the background of stablecoin regulations internationally. It has been a topic of interest for global regulators and policymakers for some time now. And the HMA, we have been actively participating in international discussion. And right now, there are consensus among financial regulators that stablecoin issuance activities would need to be regulated globally. So in Hong Kong, for us, we're aiming to introduce a regulatory regime that's consistent with the international framework. And especially for the HMA, in January last year, we published a discussion paper to, just talk about our general thinking, our framework around why we think stablecoin should be regulated. And in January this year, we published a conclusion paper to sort of just, summarize the feedback we got from the general public, and also later a little bit our further thinking around how we think about stablecoin regulation in Hong Kong. On a go-forward basis, we will do another round of consultation with more granular details on the regulatory regime design and also the legislative process. And our goal is to implement the regime hopefully by 2024.
Yeah, I saw the announcement. I'm excited the fact that you invite so many international players to be part of the consultation, which is awesome to hear. There's so many different type of virtual assets. So why do you pick stablecoin particularly as your focus for the regulations?
Yeah, that's a great question. And just to be clear, regulators globally generally focus on fiat reference stablecoins, meaning stablecoin that is linked to a single fiat currency or a basket of fiat currencies. And this is the focus of regulation for a couple of reasons. Number one is, as you think about stablecoin, as I mentioned earlier, it's linked to a fiat currency. So there's linkage between traditional finance and also virtual asset ecosystem through stablecoins. It's an important on-off ramp infrastructure, and also as you mentioned, it's used by many ecosystem players in the world. And so because of that, there's important and also significant spillover risk. Think about a scenario where something happens to the virtual asset ecosystem, it could spill over to the traditional financial system through stablecoins, or vice versa. And because of that, there are also financial stability implications to that. That's one of the reasons why we think stablecoin issuance activities should be regulated. And number two, the second reason is because of the fact that stablecoin, as the discussion of stablecoin begins a couple of years back, that there's a view that it could potentially become a means of payment in the real economy down the road. And for example, I've met virtual asset ecosystem players who are actually exploring interesting use cases around things like cross-border payments, remittances, and trade settlements. That would again create financial stability risk and user protection risk. And it's important to make sure stablecoin is actually stable. So this is the reason why we think stablecoin issuance regulation is needed, especially in Hong Kong. And the third reason I think it's important to be the focus of regulation is because stablecoin is often seen as an important building block in the virtual asset ecosystem. And we feel like regulatory clarity around this will promote the sustainable development of the virtual asset industry and allow stablecoin to do its job as an enabler in the ecosystem in a prudent and compliant manner.
Yeah, Ernest, I definitely agree on sort of the particular cross-border payment, like Hong Kong with Philippines or US with Mexico, or the Middle East with India. Is definitely, there's a lot of pain point I think potentially stablecoin can help and address. What are other opportunities that you think that we can potentially with stablecoin in Hong Kong? Frankly, I really wanted to know because I'm early stage investors. There's tons of my US founders actually would love to sort of explore coming to Hong Kong potentially. So the more opportunities and idea you have, like the better. I'd love to hear your thoughts.
Yeah, sure. So from a broader perspective, I think as we talk to a lot of ecosystem players and also investors around the world about Hong Kong, I think the number one thing that they want from us is regulatory clarity. And this is exactly why this webinar is being held, right? It's we want to sort of tell the world that we aim to provide that. And also, I think Justin mentioned earlier in the webinar that the Hong Kong government and also together with the regulators, we aim to obviously provide regulatory clarity, but also we also focus on market development. I think if we looked at the virtual asset policy statement that was issued by the government last year, it talked about developing a sustainable and responsible ecosystem in Hong Kong. And it also talked about a number of different things, but it also talked about the need to have proper guardrails around virtual asset activities in Hong Kong. So I think this very clear stance actually help businesses make decisions about whether they want to start a business in Hong Kong, expand into Hong Kong. I think this is really important. And again, this is the number one thing that people want from us as we talk to people around the world about the opportunities in Hong Kong. And secondly, I think it's interesting as we think about all this, we gradually see the ecosystem in Hong Kong become more and more vibrant because of this, because of the policy statement, also because of the fact that we are aiming to provide regulatory clarity. From our perspective, we see strong deal flows in Hong Kong this year. And also we are beginning to see startups, venture capital firms coming to Hong Kong, trying to see the deals and also see if there's opportunities to set up in Hong Kong and also attract companies into Hong Kong. And I think with all these, ecosystem players, investors, and startups coming to Hong Kong or thinking about coming to Hong Kong, it creates a strong foundation for innovations. And as Elizabeth mentioned, Hong Kong, and our regulators, we are all very supportive of innovations, and also I think in particular the responsible use of innovation. So this is this interesting development that I see this year in Hong Kong. And I think specifically for stablecoin issuance activity, I think it's interesting because, as I mentioned earlier, it's linked to a fiat currency. So there's some natural linkage between the traditional financial markets and stablecoin issuance activity. Hong Kong is an international financial center. We have a strong capital market with deep liquidity. And also Hong Kong is also a center of treasury management. It's also very natural for stablecoin issuers to come to Hong Kong because the issuer needs to have a proper fiat reserve management mechanism. So why not do it in Hong Kong? So these are all interesting things that I think Hong Kong could offer to the virtual asset ecosystem and also in particular stablecoin issuers.
I can tell you, I have at least one companies in the US that really wanted to set up something, a stablecoin business in Hong Kong. And if that is the case, like what would be your suggestion? How do I go even about starting this, if at all?
Yeah, well, if we want to do that, just reach out to us and talk to us. To touch base and compare notes with them, and we're also keen to communicate our supervisory expectation to potential issuers who are interested to actually come to Hong Kong for a license down the road. And I think this is something so new for us. We're also very happy to hear feedback from potential issuers or even existing issuers. And I think in an ideal situation, we'd love to sort of build best practices around stablecoin issuance activities in Hong Kong with all these potential and existing issuers.
Yeah, makes sense.
I just also want to add that we are, as I mentioned earlier, we're going to publish a consultation paper sometime soon. So please feel free to read it and share your feedback with us. And also, I think Jacko or Justin mentioned earlier that we're going to have FinTech Week in Hong Kong in November. So please feel free to, I guess I would encourage you to register for it, come to Hong Kong and see the scene for yourself. And I know Edith is a speaker too, so please don't miss Edith's session.
Yeah, I can't wait to come back and to support FinTech Week, obviously. But yeah, like I think everybody who are interested should definitely check out the consultation paper because there's a lot of thought that already put into it, and they're really about like gathering all the knowledge for why and the mistake that we have seen in the past, and we hopefully be able to create like a right policy and framework to make this work, especially based on Hong Kong. I wanted to actually kind of zoom back out a little bit more big pictures where you talk about like the regulatory regime for exchange and marketplace, and we talk about stablecoin. Maybe like go back to Justin. There's so much more than just stablecoin and trading. How about like other Web3 and virtual asset business in Hong Kong? If I wanted to, NFT related and other things, like what are some of the resources I can explore that I would learn from you?
Well, of course, there are quite a lot of resources that we offer, and to help not just the virtual assets, but in general the fintech sector to develop and grow in Hong Kong. To start with, the government has actually allocated like $7 million earlier this year to establish a Web3 hub in the Cyberport. And so far, the hub has actually attracted like 150 different firms, bringing together actually a very wide pool of talents and businesses into Cyberport, into the Web3 hub. So I do think that if you aspire to start your business or VA venture in Hong Kong, then probably that will be a good gathering spot, because you'll be able to find a lot of opportunities for cross-sectoral partnership and also for business and talent development opportunities. And furthermore, as mentioned before, we have dedicated teams at Oasis to tailor-made special facilitation measures for firms that actually wish to set up in Hong Kong, especially for financial technology firms. So this obviously covers VA, Web3, and also different other Web3 applications and also other fintech. So we actually encourage you to reach out, for example, to our ETO colleagues or to Invest Hong Kong to actually get the conversation started with Oasis and with the Invest Hong Kong team. With our proactive policy and regulatory framework, we do believe that, and we have to also mention our Hong Kong's traditional advantages in terms of, for example, geographical connectivity, our very clear and simple legal and tax systems, and it would actually provide you with a lot of leverage to actually start your business in Hong Kong and also to build up your venture as you progress into like furthering your business. And finally, if you are a VA or Web3 practitioner, we would also suggest that you explore your opportunities here in Hong Kong, because we have launched various talent schemes in grooming financial talents. And other than that, we also have, as we mentioned, a very vibrant VA ecosystem and Web3 scene in Hong Kong. So please don't forget that. And apart from all these, you actually get to experience the very vibrant life in Hong Kong. So we believe that it actually offers a very good package for everyone who actually is interested in a career in the Web3 and VA space.
I love the fact that you named the organization Oasis. So it's sort of like the Oasis in the Web3 and virtual asset world. Everybody should come visit. So thank you. Like, this is all the question that I have like planned for our fellow panelists. Now I'm going to actually switch to our open Q&A. And maybe we'll start with the first one, which I think definitely very near and dear to my heart, where we talk a lot about sort of regulatory landscape in Hong Kong, but especially, Hong Kong ETO and Invest in Hong Kong often talk to a lot of the startups and businesses worldwide, right? They come and basically there are other choices, right? So they're looking at Dubai, they're in other places. How would like Hong Kong sort of compare in terms of regulatory or even like compared to other hotspots like Dubai or Singapore? What are the key things like for our audience who are startup and businesses wanted to explore and pick and choose where should I go first? I'd love to hear you guys' thought and how we compare to other cities.
Maybe I'll start first. Obviously, we can't go into a lot of details talking about the regimes from other economies. But then I would say that there are actually quite a lot of differences between how Hong Kong approaches things when it comes to VA regulation as compared to generally. Like Elizabeth mentioned earlier, many of the other economies actually started with what we call the light touch approach when it comes to regulation, because in terms of like the international regulatory regime, the discussion started first generally in the AML and CFT sector, and then slowly grow into other considerations like financial stability and things like that. And which is why we see that a lot of regulatory regime currently focuses only on AML and general compliance matters. But as we can see from a lot of past incidents over the past year or so in the VA, in the virtual assets world, there is actually a strong demand for stronger investor protection, and this is actually not for only for the benefit of the investors, but also for the development of the VA sector. Because if the VA sector wants to increase its exposure to other investors and to the traditional financial market in general, there is a need for us to actually build up a very strong and transparent regime that not only covers general compliance matters, but also investor protection and other financial prudential measures. And that is why we have been working with both the SFC and the Hong Kong MA to ensure that any system that we put in place, we already have all those elements put in. And this we actually believe can actually instill confidence of the market into the VA sector and ultimately help to realize the picture that we want to reach. That is creating the synergy between the traditional financial markets and the VA sector. So that is one thing. And the other thing I want to highlight is that we have been talking to quite a lot of different firms and market participants in the past. And the general feedback is that at least for, I'm not talking about the other regulators, but at least for Hong Kong, they actually find that our regulators are actually very responsive to market opinions and very open about their regulatory expectations and things like that. So for a lot of VA practitioners, we have been hearing them talking about the importance of having clarity in terms of the regulatory requirements and expectations. And I believe that Hong Kong, this is one of the advantages of Hong Kong, because we have been very clear about what we want to do through the policy statement and through different regular contacts with the industry. And thirdly, as I mentioned, Hong Kong actually has a very strong traditional financial sector. And with all the advantages that I mentioned just now, we do believe that we can actually leverage on what we have in terms of regulatory experience, our investors base, our market practices, to actually help both the traditional financial market to venture into the VA space successfully, and also for VA and Web3 firms to actually gain access to a wider array of clients and potential investors.
And in addition to that, Justin, I think of all places, I think Hong Kong have the best food, so everybody should come and visit Hong Kong and do business there. Okay, so maybe we can switch topic. This question is about, this is interesting. So I guess this particular businesses have vendors as pay in token, while the clients and investor are pay and invest in tokens. So their dollars are converted into tokens. So for a transaction like this that is done in Web3, in this context, what are some of the policy or regulations in Hong Kong that you will have to comply with? Is that enough so the accounting or auditing firm that can serve and sort of support this community?
Right. I think in relation to the requirements that apply, currently under the new licensing regime, what we're regulating are virtual asset trading platforms. So anything that is not a virtual asset trading platform, or it does not fall within, the SFC's original regulatory remit, which were securities and futures contracts, then there, at least from the SFC's perspective, there isn't any particular requirements that would apply. In terms of the accounting and auditing requirements, whether there are sufficient accountants or auditors in Hong Kong, I think we also acknowledge that there might be a shortage of talent everywhere, given that virtual assets are really quite a novel asset class. What we've done in Hong Kong is that we've tried to provide clear regulatory guidance and also to require requirements in relation to accounting, auditing, and all that. The reason is that we think that it's important to build up the ecosystem in Hong Kong. I think since we started back in 2017 up till now, 2023, I'm quite confident to say that more and more service providers are using Hong Kong as a base, and Hong Kong is starting to have a talent pool in relation to any various different aspects of the virtual asset landscape. So we've been using these requirements in order to actually build up the talent in Hong Kong. And I think right now there would be certain auditing firms that actually have the expertise to provide accounting and auditing services in relation to virtual assets.
Thank you, Liz, for your comment. I'm going to move on to the next question around stablecoin. And Ernest, I think this is definitely for you. You mentioned a lot about the details on the stablecoin and consultation. Is that a particular timeline? Is the proposed regime sort of focus on payments specifically? We'd love to have kind of double click on more details on this.
Yeah, sure. Thank you for the question. For the next round of public consultation, it's going to come anytime. So please make sure everybody watch out for announcement from the HMA and the Policy Bureau. It's going to come anytime. And so that public consultation paper is meant to, again, solicit more comments on the more granular design of our regime, and also provide a little more information and clarity on the legislative process on a go-forward basis. So please make sure you guys follow the HMA website and also our announcements. In terms of what we're planning to regulate, obviously, as this person who asked the question already pointed out, at the beginning, it's more focusing on payment-related stablecoins. But as time goes by and as the ecosystem develops, it's quite clear that stablecoin could be used for many different things. It has a lot of different use cases. For example, obviously, in all of the VTPs, there's supposed to be some stable coins as anchor settlement assets, for example. So our regime is not designed to restrict the use case of stable coins. Our regime is meant to focus on a couple of things. Number one, as I mentioned earlier, the stablecoin is it has to be stable. That's number one. Number two, the stablecoin issuer needs to ensure it has a robust operation. So that's why we have, for example, requirements on fit and proper and fit and proper and stuff like that. And the third thing that we focus on is the stablecoin issuer should not engage in any activities that would promote conflict of interest with the core business of issuing stablecoin. So again, I think the point is not to restrict the use cases of stablecoin issuers who are going to issue stablecoin in Hong Kong, but to ensure the stablecoin is stable. The issuer is also has a robust operation, and also the engagement, the business that has no conflict of interest with the core business of issuing stablecoin.
Thank you, Ernest. I'm doing multitask, looking at all the questions from our audience. Next one, I'm going to actually pick Lawrence Chu's questions, who's on the task force and also sitting on the board with me on the Web3 Harbor nonprofit that we are all about promoting sort of policy for Web3. Lawrence has a really interesting question, which is, as I mentioned earlier, there's over now 10 major institutions that have submitted BTC spot ETF application in the US, and very likely it's going to be approved in the next 6 months. Why is Hong Kong not taking advantage of this timing and maybe launch one first? What do you guys think? This is all about timing.
Right. We actually previously launched a regime back in October 2022, where we allowed retail virtual asset futures ETFs to be authorized in Hong Kong. So we set up an authorization kind of regime for this kind of product. And right now there are 3 ETFs that have already been authorized, but this is a futures-based product and it's not a spot product. And we are very aware of the demand from industry and maybe also from investors for a spot product. What we're doing at the SFC is that we are looking carefully and closely at this type of product proposal. I think one of the reasons that formed the basis for only allowing futures-based virtual asset ETFs back then was that the trading platforms overseas are not regulated from an investor protection perspective. So because these trading platforms, other counterparties and all the sources of virtual assets where a fund manager can actually trade in virtual assets, all these venues are currently only regulated from an anti-money laundering or a payments perspective, then we are a bit concerned about whether they have controls in relation to, for example, market manipulation, because ultimately the ETF needs to track the price of for example, Bitcoin or Ether, and we would hope that the trading venues that are chosen, the underlying trading venues, are actually robust. So I think we are looking very closely into this, and if we think it is appropriate, it would be something that we could be authorizing down the road. And rest assured that we are really studying these proposals, and we hope to be able to find a balanced approach in relation to the authorization of such products.
Thank you, Liz. Next question, I'm going to go to a question. There's a lot of questions. Since all of you guys are involved with the government and different sort of department or regulations, it sounds like you have your day job, which is supporting the non-Web3 related regime and licensing. Do you guys have like enough people or resources and staff to deal with all these applications? Because it sounds like there's a lot of things going on, and I'd love to hear from all departments, I guess.
All right, I'll start first. I think talent shortage is a worldwide thing. It's particularly prevalent in the virtual asset industry. I would love to have more resources, and I would hope that Justin hears this so that when he approves our budget, we might be able to get more headcount. We are trying the best that we can. We've tried to be more innovative in the resources that we use. So we're looking into, using the wider department's resources rather than just focusing on a small team. So we're trying our best, and we hope that we can keep up with the development of the industry in Hong Kong.
Yeah, so from our perspective, from the HMA's perspective, obviously more resources the merrier. So sorry to put you on spotlight, Justin, but yeah, more resources will be better.
Well, even for the government, we would like more resources for the policy team. But then I would also like to highlight that we have been focusing quite a lot on fintech and virtual assets, because back a few years ago, we don't really have a team dedicated to virtual assets. But then we now have one, and we also have another one focusing on fintech, and quite a lot of other teams are actually working on topics that relate to virtual assets. For example, in terms of private wealth management, in terms of general banking and securities regulatory matters. So I would say that there shouldn't be an issue with not, at least right now, because the market is actually developing very rapidly. We can't say like how much resources we actually need, but we do rest assured that we will have sufficient resources, both for the policy team and also for the regulators to actually deliver what we want to do. And you can actually see that from the way we have been like pushing out measures. We have been like announcing the policy statement, pushing out the regulatory regime, working on the stablecoin regime, and also a lot of reviews on the traditional financial market side. And all these actually can't be done without the needed manpower. So do feel assured that we will have the needed manpower to do all these.
Got it. And so it sounds like basically Justin, Liz, and Ernest are all hiring at the same time to make sure that we can get, support all the demand. Last but not least, we're only like few minutes left. I want to actually kind of shift our conversation, probably top of mind, especially for a lot of the audience, like from the US, is sort of all about the regulatory stability of Hong Kong. And how is that sort of counterbalance with China influence? And I do want to sort of put it out there, which is really fascinating for me. I saw an article that actually talking about how in China now there's over 260 million that have set up the digital yuan wallet. That is kind of crazy. And some of the government employees are now actually taking salary in digital yuan. And so to me, that is super advanced. But I think from somebody who's like coming from the US or the rest of the world, what does that mean with all the regulatory talk that we have today? And what's the influence of China? I'd love to hear you guys' thought on this topic.
Yes, we actually we are very glad to hear that question, because like generally when we talk to different market participants, whether locally or globally, we actually get that question quite a lot, because like as Edith just mentioned right now, there are actually quite a lot of exciting developments in terms of when it comes to fintech and digital payment in China. And we do believe that ultimately that could create a lot of opportunities for both the mainland China and also for Hong Kong and in general in the Asia Pacific region. But then the other side of the coin that we often hear is that many point to the policy stance of the mainland China over cryptocurrencies and also virtual assets, and whether that will influence whether Hong Kong will continue with its very open stance towards the VA and Web3 development in Hong Kong. And I would say that that shouldn't really be an issue, because like the ultimate philosophy is that different jurisdictions will adopt the right approach to regulate or to oversee their own market. And Hong Kong is actually no exception. We are an open market and we are an international financial center. And we already have quite a vibrant scene in Hong Kong doing Web3 and VA. And there is actually no reason for us to adopt a very restrictive approach towards the development of Web3 and VA. And do remember that Hong Kong is actually working under the one country, two systems philosophy. So this is actually one area where we actually are very certain that we will continue to be very open towards the development of VA and Web3 in Hong Kong. And this is actually not just about like you can actually see it from our actions. The SFC started with their own opt-in regime for virtual asset trading platforms back in like 2018. And then we moved on to the current regulatory regime. We started consulting in 2020, doing another round of consultation in 2021, pushing it into the legislature in 2022, and then announcing our policy statement, and then telling the public that we are now working on stablecoin, which we are actually working closely with the HKMA on the consultation document. And we also have a lots of different measures being pushed out at the same time. And these took place not only within like a few months, but actually over a prolonged period of time, which shows our commitment and also our belief in the virtual asset market. So do rest assured that there is going to be regulatory stability. So there is no issue that should be a concern for anyone that is considering moving to Hong Kong or starting up their business here.
Thank you, Justin, for commenting on this. With that said, we only have 3 minutes left, and we have so many questions that we don't have the opportunity to address today. But I think like tons of audience would love to sort of get in touch with you. Do you guys have any final thoughts or the way to kind of in touch with you before I invite Jacko back to wrap up this conversation?
Well, as always, both whether the regulators, the SFC and HKMA, or the Policy Bureau, the FSTB, we are all very welcome to any comments or requests for meetings with market participants, because we always welcome the opinions of market opinions and feedback from the market, because we are actually working very hard on devising our further measures to develop the VA market. And the other thing is a little bit of advertisement is that don't forget to come to the FinTech Week of Hong Kong, because that will be another opportunity to actually not only to get to talk to us, but also to those that are actually developing their businesses in Hong Kong, and to see for yourself that what a vibrant scene we have right now.
Yeah, and Edith, you mentioned there's going to be a discount code for people who stay on to the end of the webinar, right? So feel free to grab that from Edith or Jacko, or
Yes. All right, Jacko, back to you.
All right, thank you. Thank you, Edith, Justin, Elizabeth, and Ernest. Thank you so much. What an illuminating discussion. I hope this webinar has got you excited about exploring Web3 and virtual assets opportunities in Hong Kong. As I said earlier, there is a Hong Kong FinTech Week taking place on the 2nd and 3rd of November at the Hong Kong Convention and Exhibition Center. And there will also be a Greater Bay Area Day on the 31st of October. So attendees of today's webinar will receive a 15% off for tickets for the Hong Kong FinTech Week. The discount code is at the chat box now, so copy it down and get your tickets. That concludes our webinar. Many of our speakers today mentioned the lack of talents in Hong Kong, and we want to attract more talent. So I want to draw your attention to the Top Talent Pass. Definitely check that out. It enables graduates of the world's top 100 universities or people who have an annual income of $320,000 or more to apply for this pass to go to Hong Kong for 2 years without first having to secure a job offer and explore living and working in Hong Kong, or to set up your own business. So if you have any question about that, or any other questions you didn't get to ask today about doing business in Hong Kong, about virtual assets and Web3 development, please do not hesitate to contact us at the Hong Kong Economic and Trade Office in San Francisco and also at New York. So thank you very much. We hope to see you at our future events. Goodbye.